Good morning and welcome to the Huddled Group PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to Executive Chairman Martin Higginson. Good morning to you.
Yeah, good morning. Thanks very much, everybody, for attending. Before I get started, I'd just like to introduce Dan Wortley, Group Finance Director. Good morning. And also Mike Ashley, Group CEO. Good morning. And I'd just like to sort of frame this presentation. One of the reasons we asked Mike to step up and take on the role of Group CEO was really to help us look at predominantly Discount Dragon. We felt Discount Dragon, it's a very, very complicated business. We were seeing great growth and have been seeing great growth in the business, but we really wanted to examine how could we make this business better. On the other hand, Nutricircle has been an absolute sort of star of the show, but it was getting Mike's depth of retail knowledge into the sort of Discount Dragon piece to allow us to understand that business. We've made some significant changes within the team, and I really feel that we're now on the right track of where we want to go. So if we just flick to the next slide, please. So just sort of running through the numbers and the sort of H1 highlights. You know, revenue up sort of 4.23 million on the same period last year, 81% increase, which I think is, you know, sort of shows that we're moving in the right direction. Discount Dragon orders up in the period, but we knew and we know that we needed to sort of undertake a review of that business. We've done that now. We've started to improve basket margin and, more importantly, move the business into sort of operational profitability. So it's all about repeat orders now as we move forward. Nutricircle really has been the star of the show. Absolutely amazing. Orders up 768% and revenue up over 600% on the same period last year. So I think it really shows the potential of that brand as we move forward. Boop, and I think with Boop, it's important to remember that you know, a year ago in September, this business started. So it was very, very much from sort of fledgling beginnings, and it delivered, you know, just over 1.5 million pounds in the first half of the year. In September last year, it did about 40,000 pounds, just to put it into context. So I think, you know, a major sort of move in the right direction. And 4 million items saved from going to waste. It's important that we remember Huddled is there as a force for good. We stop surplus items going to waste. In 2024, we saved 5.7 million items from going to waste. And in the first half of this year, we've saved over 4 million items from going to waste. So let's not forget that, as I said, we are a force for good, and you know, this is about stopping perfectly good products from going to waste. So if we just flick to the next slide, please, and I'll hand over to Dan Wortley to talk about the sort of H1 financials.
Yes, thanks, Martin, and good morning, everyone. Thanks for joining us. So as you'll see there, the sort of headline income statement figures for the first half. We had Discount Dragon revenue came in just under 5.4 million, which was a 10% increase on the same period last year. We had a gross profit of £59,000, which is an improvement on what was a gross loss of 106 in the same period last year. And all of the gross profit loss figures are stated after full expense of marketing and warehousing costs. Discount Dragon made an adjusted EBITDA loss of 454,000. Again, that's an improvement on the prior year of 731. And as you've seen today, if you've read this morning's announcement, both Discount Dragon and Nutricircle are now sort of profitable at this level and have been in August and September. So there's an improvement in the second half. And then Discount Dragon loss after tax, after depreciation, amortization, and one-off costs of 782,000. Nutricircle, as Martin said, has really grown significantly. Revenue at 2.5 million. It's an increase of 621% since on the prior period from when it was acquired in April 2024. We've got a gross profit of 205k. That's up from 53 last year. Adjusted EBITDA loss of 73,000. Really giving that down to sort of an increased overhead as we've built the business up to grow it, and it'll growing into these overheads. And as I say, that's now profitable at the adjusted EBITDA level, and a loss before tax of 114,000. And then Boot, there's no comparative figures for Boot last year. Revenue, as Martin said, 1.6 million. The business only relaunched under Huddled's umbrella in September last year. Business made a gross loss of 74,000. This is really down to high marketing spend because we're in the process of growing the database. So that's the reason for the gross loss. Adjusted EBITDA loss 398,000. Business is carrying sort of relatively high overheads at the moment, but we see it growing into those overheads, and we're sort of setting up the business for success, and we see a lot of potential in it. Head office costs of the PLC related items, and then so just to sort of summarise on the group level, revenue just under 9,500, which is an increase of 81% from the prior year. Gross profit 190, which is up from a gross loss of 53k last year, and adjusted EBITDA loss of just under 1.5 million. If we could move on to the next slide, please. Thank you. So just on the balance sheet, we've got receivables of sort of about 160,000 pounds of stock in transit. So the stock position is at the end of June 1.3 million. Cash, we had 552,000. That's before the 1.5 million investment that came in July and August. And we've taken some borrowing opportunities that came available in the period. So we've sort of taken that on, which has been helpful, and it's a good option for us for stock purchases and that sort of thing. So that's the balance sheet. And next slide, please. Thank you. Just briefly on the cash flow. So we've had about 1.4 million cash outflow in operating activities. Working capital movements was as part of that was positive about 300,000. A big element of that was to do the Let's Explore business, which unwound. So we sort of benefited from quite a bit of cash from that. Obviously, as we get into the second half and losses are narrowing, that will put far less pressure on this on the cash flow from that point of view. We had £315,000 capex in the period, net capex, a relatively high capex period, actually very high for us with warehouse works. The warehouse that will be going forward will be far lighter as we move to THG. The capex will reduce significantly. So all in all, cash outflow of about 1.1 million. But just to sort of say just to repeat what I said before, the narrowing losses and the reduced capex will sort of help that position going forward. And I will hand back to Martin. Next slide, please.
Thanks, Dan. So let's just get into the sort of Q3 highlights. And as I mentioned before, Discount Dragon is a hugely complicated business. Getting the product mix right is really important, and actually getting the sort of retail knowledge that I felt we needed was hugely important. I think you can see there in the first number the 20% increase in basket margin is a real step change in the business. And just so people understand this, we talk a lot about average order value. Now, average order value is important because ultimately that helps drive basket margin, but it's about getting that consistency within the offering. And what we don't want to do is increase our average order value too much, because if we go sort of too much beyond the sort of £50 mark, then that means that we have to send out 2 boxes. And in sending out 2 boxes, we incur more postage costs and another box cost and more pick and pack. So it's really about finding the optimal sort of average order value, but then driving basket margin. So the improvement in basket margin has been a major step change in the business, and that's what's led us to operational profitability in August, which is our sort of toughest month of the year, and again in September. And what we're starting to see now is consistency in the brand, consistency in the offering, which Mike will talk a little bit more about later on. Nutricircle, absolutely the hero of the piece. Revenue in the quarter, we're expecting this to exceed 1.4 million. And just to put that into context, that's more than we did in the entire year last year. So it did more in the quarter than it did in the whole of 2024. So again, let's not sort of forget the real star of the show here. AOV in Nutricircle up 19%. And again, back to that basket margin, which is so important, and it's important across all of our brands, up 23% in the period. And as we start to build out the sort of the offering in there, adding in vitamins and other products, we hope and believe that we'll sort of further improve that basket margin. Boop orders, and again, it's really important that everybody remembers this is effectively 1 year old. Now in September last year, we did just around 800 orders. At the moment in September this year, we expect orders to be over 7,000. So I think that shows the momentum that this business has got under its belt. It is a great business. There's sort of 3.6 million pounds of cosmetics go to waste each year. So massive opportunity here, and I think we're well positioned as we start strengthening our sort of product mix. We're well positioned to take advantage of that. And during the period, we took a 1.5 million investment into the business at no discount. We got a major institution on the share register, which I think for me was a big tick in the box. Helped strengthen our balance sheet, and more importantly, it gives us the runway and the confidence to move the business into sort of not only operational profitability but full profitability without having to come back to the market. So we are very positive. I think we've made a lot of the right decisions and the right changes within the business, and I think we're now well poised to move on to the next stage of our journey. The next slide, please. I'm going to hand over to Michael Ashley now, who will delve a little bit deeper into some of the things that he's done during this sort of short tenure that has really helped to sort of move the business onto the right track. So, Michael.
Thanks, Martin, and good morning, everybody. I'll kick off with Discount Dragon. So I started in early July, having joined the business from my non-exec position. What I found was the following: we had a pretty inconsistent range proposition. That was a limited choice in the key categories of food cupboard, tea, coffee, and household. We weren't really encouraging customers to get to that £40 delivery threshold as well as we could. We had inconsistent margins, and that was probably from a not a disciplined approach on margin management, and that was due to an inexperienced category management within the team. So we focused on the following: better product availability. Really important that both our front and back baskets were consistent. And to do that, we had to widen the supply base, and we've been pretty successful at that in the quarter. We've offered greater choice on key brands in household, food cupboard, alcohol, tea and coffee. We've still got a long way to go, but that's been significant in our 20% growth in basket margin for Q2. We've had a very disciplined approach to what we call our front basket discounts. So our freebies, if you were to look on the website this morning, unless the team have changed it, and we're giving away 20 free twirls. We know the cost of that, obviously. We limit that level of discount on the front margin. They're there to drive footfall to our website. The back basket, the category, the width of choice on the category is very, very important. So we've got greater choice in food cupboard, household, tea and coffee. And what you'll also see is a balance of price points. That's also really important to get to an average order value of £40. So it's just as important that we have really good value at £10, at £5, at £7.50. Ultimately, we've driven real consistency in the boxes going out to our customers. We average 9 to 10 items day in, day out, which is really helping to build that basket profitability. Next slide, please. So in terms of Q4 in Discount Dragon, our 25 focuses on the following. We've got 180,000 customers. It's important that we improve the frequency of the returning customers. It's important that our customer service improves through delivery accuracy and speed. We will be able to offer next day delivery with a late cut-off, which really brings us into today's expectation. It's really important that we target the different customer cohorts. We've got a brilliant CRM data analysis that we need to target those customers who buy only into certain categories. So when we're back in stock on coffee, it's really important they know straight away. And in seeing Discount Dragon develop in building our organic social marketing with core messaging around saving money and the planet, we are a force for good. We're stopping food going to landfill, and yet we can offer great brands at really fantastic prices, and again maintaining that balanced price point. So we have to build the brand personality. I think becoming famous for what's next in my Discount Dragon basket, and we have to continue to improve and review stock availability and range. We've got some fairly exciting conversations with big distributors within the UK food market, and we are building relationships also directly with the key brands and manufacturers. That's really important going forward to help our consistency of offer and offer that choice on a daily basis. This is what will drive repeat customers. Next slide, please. Nutricircle. So as Martin already spoke to, this has been the jewel in the crown in the quarter. I think the improvements to the website and functionality has made it easier to shop. We've been successful in growing sales outside of protein bars, which have been pretty much our staple. We've improved the width of choice. It's now easier to get to the £40 AOV. So that's driven fantastic results. So the average order value is up 19% for Q2, but really impressively, the team have delivered an improved basket margin of plus 23% versus Q2. So we've successfully driven sales outside of protein bars into more healthy snacks, and that really has driven strong repeat monthly customers. As we said, from 5,600 to 10,000 per month. This has given us a really good platform for growth in Q3. So next slide, please. So in terms of our Q25 focus, I think we've got to continue to improve and expand the product range. You'll be seeing us adding more vitamins and supplements to really widen our reach into food nutrition. We will continue to increase the average order value and basket margin. We'll build and enhance the brand personality. We do need to we need to build the awareness of the brand and what we do. We will benefit from the move to 3PL in terms of our delivery accuracy and speed, and that will ultimately improve the customer experience. I think it's really important in Nutricircle that we now invest in this business to add new customers. because we see really strong returning customer data, which we hope to build on in Discount Dragon. We already have this in Nutricircle, so I think, you know, we can get to profitability quicker on Nutricircle. So, you know, that's the reason we will prioritise investment in Nutri in Q4 to add customers to our database. Thank you. Next slide, please. So Boop, definitely, a year of growth. You know, the brand is only a year old. It is our most immature brand, and as a result, we have 50,000 customers as a base. We do have growing pains. You know, we have to point out that we have an inconsistent range proposition. We are working hard to improve choice in the key categories of hair, skincare, lips, makeup, and fragrance. At the minute, our supply base is too narrow, and therefore we don't present the products we want to regularly enough. You know, if you compare Boop to Nutricircle, Nutricircle benefits from being around for four more years and having a customer database that is broader, with, you know, deeper relationships with suppliers. This is where we need to get to on Boop. It's pretty much the same business model. You know, our AOV aspirations are around £40 per basket, but we need to give the choice in the categories in order to make sure that the customer, you know, has £40 worth of products to spend every month. I think this brand though does have so much potential. It has very favourable product economics. If you compare to Discount Dragon, you can get to a £40 delivery threshold probably from 5 or 6 products. That's what we see at the moment. They tend to be small in cube, and therefore, from a delivery and supply chain perspective, this really does mean there's a good profit opportunity. And when we get it right, and when we do have good stock, it lights up, and it lights up straight away. So for me, focus on Boop for Q4 is really building a consistent range proposition. So next slide, please. So we have to improve the stock position, and in order to do so, we've strengthened the team. We've brought in expertise within the beauty market, and I think that's going to be critical to opening up new opportunities within the supplier base. We will continue to increase the customer database. We're at 50,000. You know, we've got to build that, but at the same time, you know, through an improved proposition, we should be increasing the frequency of the returning customer. I think very, very important to expand and improve visibility on the social media channels. The beauty market is awash with personality, and I think we have to basically play within this space. So for me, the hard yards are now on Boop. It really is about driving better availability to improve our proposition consistently and on a daily basis. Thank you. Next slide, please. So I'll now hand over to Martin, who will talk to you about our move to Ingenuity.
Thanks, Mike. So we've spoken a lot about wanting to improve our sort of fulfillment operation, wanting to get to next day delivery, wanting to strive to be more of a sort of an Amazon type service. And we know this is really, really important to us and more importantly to our customers. It has taken longer than we would have hoped to move the fulfillment center. But just to put that into context, you know, we've got to move over 40 articulated lorries. That's over 1,000 pallets, and that's over 500,000 items, all of which need to be barcoded, need to be checked for their sort of volumetric sort of sizing, and need to be loaded in to the Ingenuity platform. So it has been more complicated, it has been more challenging, but we are very, very much on track. And, you know, I think once we achieve this, and we get there, then the customer experience will be night and day from where we are. Highly automated, and in driving that automation, it will eliminate picking errors. And we've spoken about the number of items in the basket. We've spoken about the sort of complexities around things like discount dragging. And it's important that we get that accuracy. The less mistakes we make, the better our Trustpilot reviews. The better our Trustpilot reviews, the more likely and the more accurate we get our delivery, the more chances you've got of actually coming back and buying again from us. Later deliveries, these are going to be really, really important. It's going to be important in groceries, equally as important in Nutricircle, but I think probably Boot Beauty is probably the one where if you can order up to sort of midnight or even 1 AM for sort of same day delivery, then that's going to hit and resonate with the customers, and certainly that audience of customer that wants product and wants it tomorrow, as I said, in an Amazon type fashion. When we get better accuracy, there'll be less refunds, less breakage, less sort of mistakes. So again, a big sort of tick in the box. Fulfillment capacity is no longer an issue. Because we can operate 24 hours a day, it's fully robotic. There are no problems with capacity, and capacity has been something that we've sort of struggled with historically. We've hit 3,000 items, and then all of a sudden there is a delay in getting those out of the door because you've just got humans involved. So the more we can remove that, the better it is. But all of this is then based on sort of the core fundamentals of getting our product offering right, getting the margins right, and then getting it to customers on time and accurately. So we're sort of a long way down the road. The team, Paul Simpson's heading that up, is our Chief Operating Officer. Paul's not here today because he's busy working on the migration as we speak, and we will be up, running and able before the Black Friday and ready to take orders from customers. Can we move to the next slide? And I'm just going to show a little video of the automated sort of service that we're moving to. So if we just play the video, please, I think it will be interesting. Thanks very much. So you saw in that video some key words which I think are really important: retention, focus on customer service, and these are what is going to be really, really important as we strive to improve our offering across all three brands. Next slide, please. So in summary, look, what we've got here is we know we've got demand for the product. We know we've got demand for value. Yes, we've got to get more things right. We've got to get discount dragging customers coming back. We've got a long, long way to improving the offering. We've strengthened the team. We can see that that's happening. We can see it's happening in Nutricircle already. And as we broaden the offering, we'll improve the basket margin on that. And Boot Beauty is really sort of there. It's gone from 800 orders to 7,000 orders in a month. We're now about sort of getting the better product range and improving that. But demand for the product and demand for value has never been stronger than it is today. Next slide. So we've got to sort of, Mike spoke earlier about the sort of tone of voice, and we've really got to strive and get over to people that we are a force for good, that we are saving surplus from going to waste. I spoke earlier about the amount of products just in the cosmetics business that go to waste, £3.6 billion a year. of cosmetics products are wasted, which shows the sort of scale of the opportunity. Next slide. And I think that really sort of, underpins our sort of a force for good. So just flip to the next slide. So Discount Dragon, work to be done, but we're making vast improvements. 20% increase in basket margin on the quarter has meant a meaningful step change. We moved into operational profitability in August. That's now continued into September. And with a level of consistency and a level of accuracy in our basket margin, we can see that continue when it grows from here on in. Next slide. Nutricircle, absolutely the hero of the quarter. Orders up massively, over 700%, revenue up 600% in the same period. Will deliver about 1.4 million of revenues in this quarter, more than it did in its entire year last year. So moving in the right direction. We will further strengthen and broaden our offering with Nutricircle over the coming months. We're going to do some big deals that will be announced and sort of strengthen that proposition. That will further improve the basket margin and continue its journey with solid operational profitability. Next slide. And Boot Beauty, focus on products. Our team is actually out in Cannes as we speak. They're at a big cosmetics conference. We know that they've already done a number of big deals there for us. So we're confident our product offering is going to improve. And as Mike said earlier, once we get the right products at the right price, this business absolutely lights up. And with the right products, we know we can take this into take it in the right direction, and that will move into profitability in the sort of coming months. And all three of them combined will help us move into sort of group profitability within the resources and the bandwidth that we've got. So strengthened management team, solid balance sheet, great institutional investors, and I think now we've got a core proposition across all three brands that is delivering results, delivering operational profitability, and marching us forward to group profitability. So thanks very much for listening. I really appreciate it, and we'll just open up now to questions.
That's great, Martin, Michael, Dan. Thank you very much indeed for your presentation. I will now turn on your cameras for the Q&A. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. And Martin, Michael, Dan, we have received a number of questions, both pre-submitted and throughout today's meeting. And I wanted to start off the Q&A session with the pre-submitted. The first one reads as follows. What is the current mix of new customers versus existing for each brand? And how do you see this developing over the coming quarters?
Yeah, thanks. Great question. So look, it's important that we look at each brand in isolation because each one is sort of slightly different. Discount Dragon, average number of repeat customers is around about sort of 19,000 based on the sort of last 6 months. What we spoke about earlier is that the focus on getting more people to come back. We've improved the proposition and improving the proposition. We're now confident that people will come back more frequently. We've added things like more coffee. We've added things like cleaning products. And all of these things help you not only get to the £40 threshold, but give you a reason to come back. So not only can you fill your basket with snacks and treats, you can also fill it with cleaning products, tea, coffee, and essentials. So, and then that will improve the better basket margin. Better basket margin makes ultimately for sort of more operational profitability and allows us to then invest more money into marketing and attracting new customers. So on Nutricircle, the intent of the customers is very, very high already. And a lot of that's down to the core proposition that we've got and the sort of actual intent of customers to buy those sort of health and wellness products. We've seen the repeat customers rise consistently. At the beginning of the year, we were attracting around sort of 5,500 repeat purchases. In August, that was nearly 10,000. So it's a massive improvement. So you can see it's going in the right direction. And the more repeat customers that we get, the more profitable that business becomes. And with improvements in basket margin, all of this just helps us march along on the sort of profitable cycle. But repeat customers are really, really important.
And I think just to add on Nutricircle, we are going to invest in new customers. because we've got such a solid repeating customer. So I'd anticipate in Q4 our average order value, which is grown considerably in the last 2 months, to be maintained, because we will have probably a high proportion of new whose AOV tends to be £2 or £3 less. So we want to add to that base, because we're confident as soon as we add to that base that they'll return very regularly, which is obviously very positive for sales and profit going forwards.
And I think it's about that rinse and repeat model that we've got, and we've absolutely got it right with Nutricircle. Boop is, it's very much at the beginning of its journey. At the beginning of this year, we had about 1,200 repeat customers that had grown from very modest beginnings in September of last year. In August this year, we talked about sort of 7,000 orders, but there's going to be about 3,500 of those will be repeat. So you can sort of see that about 50% are repeat and 50% new. And as Dan alluded to before, we need to grow that base. In growing that base, we'll get more and more repeat customers. We can see the trend in that. We can see high levels of intent, and we feel that Boop will very much follow the same pathway as Nutricircle. High intent, decent basket margins, and a march to sort of solid profitability.
Fantastic. Thank you very much. Moving on. Do you expect the funds raised in July to be enough to carry the business to full profitability?
As per the statement, first of all, getting a big institutional investor on board, a large institution, was a major milestone for the business. Adding more institutions to the share register, in my view, is a good thing. The additional cash has helped strengthen our balance sheet. But the most important thing here is our move to operational profitability. And as we keep moving and we keep on that trajectory, then we will move to group profitability. And that, with the reserves that we've got at our disposal, will allow us to do that.
Thank you, Martin. Next question. What do you think is a realistic target for group AOV in the coming 12 months?
We continue to focus on AOV, but again, you've got to sort of break this down into individual brands. So let's just start with Discount Dragon. AOV is really important, but the most important thing here is basket margin. And as I spoke about before, at the moment we probably average around sort of £45–50 per order, including VAT. But if we went over to £60, which everybody immediately sort of think that was great, adding another £10 of AOV. But in most cases, because of what we ship, being sort of cans of Coke or large items, that would tip us into a second box. And in tipping us into a second box for delivery, that means we've got another delivery charge, we've got another box to pay for, and we've got more picking and packing. So AOV is important, but what is important is basket margin. And I would say really focusing on the basket margin and the improvements that we've made on that, whilst maintaining a solid AOV at sort of £40 net of VAT.
Yeah, I think from a Discount Dragon and Nutricircle perspective, we've got a formulaic approach, which is now driving consistency. So for me, the AOV will remain constant, and so will the basket margin. What we have to do in DD is get more returning customers, but the returning customers will still hit the same AOV and basket margin because of our disciplined margin approach. Nutricircle has seen big gains in Q3, and I think Q4, whilst adding new customers, will drop the AOV. The returning customers will maintain it. So overall, it will be a maintained position on both AOV and margin. And then from a Boop perspective, it's really inconsistent because of the choice in products that we're currently offering. But we know when we get that right, that immediately increases by £5–6 to the level of the other two. So we're pretty confident that once we get better choice in the key categories, particularly in hair care, accessories, and cosmetics, then the £40 delivery threshold will be attained, and we're confident that we do buy at the right price. So we'd be confident that we'd hit our basket margins that are very similar to Nutricircle. So we've on 2 out of 3 brands, we've now got a formulaic approach. Just need more returning customers and more new customers for Nutri, And on Boop, we know what to do, but the key to unlock the door will be much improved supply. And we're doing the hard yards on that, and we will continue to do it. This business is only a year old, so we do need to forge relationships, both with wholesalers and also with the brands directly, because to Martin's point, 3.6 billion of waste is something that we can do something good about, but it will be that formulaic approach to AOV. Thank you.
Thank you. Moving on to the next one. What are your expectations for Q4? Should investors be excited about what is possible this coming quarter?
Well, we're excited about Q4. I mean, to be honest, we remain excited every day, I think, when we get up, because certainly as I call Mike every morning at 8 o'clock, I'd like to think he's excited.
I'm not always excited about that, but he does call every day at 8. Yeah.
But look, it's we've moved. We've had a big step change in the business. AOV and basket margin has improved. We talked a little bit about AOV. We talked a little bit about basket margin. Just to give you sort of Nutricircle as a good example, by actually adding a few more products to the mix, adding more choice, has actually improved our basket margin. Increasing basket margin just on that brand by 50 pence an item would actually increase profitability by around about sort of 40% based on current metrics. So you can see that the pendulum doesn't need to swing much in order for this to become a really, really exciting business. We're really excited about Discount Dragon. We're excited about the changes that we've made. We're excited about the new products and the product mix we've got. We're having great talks with some coffee producers about sort of surplus coffee in the sector, whether that be pods, whether it be instant coffee, whether it be beans or filter coffee. We're having great conversations on Nutricircle with some big names about taking different products from them. We want to add vitamins onto there. We want to add more wellness products. We want to get the breadth of offering. And Boop, we are as excited today as we were the day that we bought the business. It's an amazing business. The ability, when we get the right products for that business, to absolutely light up has never been stronger. So yes, in theory, we are really, really excited. We look forward to Q4. We look forward to the busy period that we've got ahead of us. We look forward to strengthening Nutricircle's offering, ready for the busy January that it has. Q4 is not necessarily the busiest month for Nutricircle. It's normally January, but in strengthening our offering, we're going to be ready for that.
Yeah, I mean, importantly, and it sounds obvious, but the planning the team are doing now is so much. Is looking forward so much more than it did. So we've got pretty clear plans about how we'll turn up in Black Friday in November, which is obviously peak period, especially online. And that's just so important that we have the right products, but we know what to do now as we sit here at the end of September. So I think reasons to be excited. We strengthen the team within Boop, and the knowledge of the supplier base that we need is now there. So it's clearly the number one priority, which does make me excited because I'm a lot more confident that we're knocking on the right doors.
That's great. Another one, looking into 2026. What are your ambitions for 2026, and how much do you think you can grow this business next year, if you had anything else to add there?
My ambition is for Martin not to call me at 8 in the morning.
Unfortunately, you can't always get what you wish for.
Yeah.
But we've got great ambitions for the business. The move of our fulfillment centre will really help us accelerate this business. We've always strived and wished for a sort of Amazon type delivery service. We'll be able to deliver that. DD is about now the focus on repeat customers, and once we get it home, we can then press the marketing accelerator. Nutricircle is about broadening our offering. We've grown a lot in the last 12 months, but we see a lot more growth in this brand. Broadening the offering will not only help us do that; it's going to help us improve basket margin and profitability.
Yeah, I think the platform that we've established on DD and Nutricircle means that we can invest in building the personality of the brands. And I think, we've got some customers who video themselves opening the boxes, and they are genuinely brilliant videos, just delighted in the value that they're getting, sometimes on quirky products that they wouldn't necessarily ordinarily put in their Tesco basket. I want to develop this because I think we can make make dealing with Discount Dragon fun, because of the nature of the products. I think from a Nutricircle perspective, again, developing a personality in sports, wellness, nutrition, broadening the offer to complement the fantastic range of protein bars we've got. We've got, we're close to taking the first delivery of product from a well-known wellness retailer in the UK. That relationship's only going to continue to develop. So I think, making sure we've got the right platform on our product metrics, and giving our customers more consistency in our proposition will enable us to become, much more aware, people to become much more aware of who we are and what we stand for. Because ultimately, we do deliver great value, but we're also, preventing waste, which is a very good thing to do. And at the moment, we're not concentrating on that because we've got to do the nuts and bolts of the business. So I think that will start to come to fruition in 2026.
Yeah, look, I think starting a business is never easy. Starting and growing a business is never easy. A lot of people expect this sort of 45-degree trajectory, and it's not like that. There are challenges, there are things, there are curveballs that get thrown at us. We deal with them on a daily basis, and we come back stronger and more determined every single day. So I think 2026, we want to move this business. We want to get it into group profitability. We all hate it when we're not making money, but we can see the trajectory. We can see the pathway. We can see we're on the right path to do that. We can see that we've got the resources. We see that we've got the team now around us to achieve that. So I think we're all, certainly this side of the table, we're all very excited about 2026 and what it can deliver for not only us, but also shareholders.
Fantastic, thank you. Now moving on to some live questions. Admin costs are 11 times gross margin and have grown by 30%. What is a business model that sees admin costs covered gross margin? When do you expect that to happen?
I think as Dan alluded to earlier on, this was about strengthening the team. This was about planning for growth. This was about planning for success. Yes, our admin costs are high, but we see the growth of this business being big. We see this being a big business. We're not planning for this to be a sort of small mom and pop business. We're planning for this to be a sizable business. We've touched on the amount of surplus that there is to waste. We've touched on how we've done the step change in Discount Dragon. We've touched on the growth potential for Nutricircle and also the real potential in Boop. So what we've done here is we plan for success. So yes, it's painful. We're acutely aware of that. But in doing so, we've got to have the right team around us. If we haven't got the right team, then we're never going to grow. So we've invested in that, and now it's about us delivering that growth, top line, and ultimately bottom line.
Thank you very much. And perhaps one for you, Michael. It's clear why Mike's knowledge and experience is a positive for Huddled, but it's not clear what the attraction is for Mike given all his other business interests. Mike, if you could explain this to this investor, please.
I think the investor in question may have got the wrong Mike Ashley. Unfortunately, I'm a lot poorer than the guy, and fortunately, I'm a lot less busy. As in, I am very busy, but I'm a non-exec director in Midwich PLC, and I've been for 8 years. And yeah, my background's retail, but I'm not, I think, the Mike Ashley in question. So hopefully that's nip that in the bud. That's why we've been referring to me as Michael, which is only what my mum normally does. So yeah, thank you.
Thank you very much. The next question is on the share price. The company share price indicates the market is not yet convinced. What do you need to do to change the mood?
I think we've I think we've sort of gone through that. I think establishing a platform where we deliver consistent operational profitability is the number one priority, and we've made a step change in that over August and September. Yeah, these are significant improvements. You're looking at big profit swings. You know, we've got now a formulaic approach to delivering much better customer choice, and you know, customers are responding as they will. We've done that on the 2 out of the 3 brands, and we've said how we'll build going into Q4. It's clear. There's a clear plan, and it's up to us to communicate that. From a boot perspective, because it's only a year old, we've got to build that base, and once we've built that base, we'll be well set for a successful 26.
And I think, as you know, as the largest group of shareholders with management, we're probably never been more relaxed about where we are today and more excited about the future. You know, we all know that the AIM market is struggling. We all know that it's hard out there. It's hard for investors. It's hard for businesses. But I feel we're on the right track. And this was never going to be an instant sort of win. I think if people want that, then you're better off investing in crypto or a mine. What we wanted to do was really build a business that had longevity, build a business that was a force for good, and build a business that was profitable. Yes, it's probably not got there as quickly as you know, some shareholders would have liked, maybe as we would have liked, but the reality is we are on the right track, and we're making massive leaps and forward into building a business that is sustainable, profitable, and you know, equally as importantly, is a force for good in the sort of current landscape.
Understood. Thank you very much. Next up is, are there plans to introduce subscription models to improve recurring revenue visibility?
No. We don't particularly like subscriptions. I think they're, you know, we want to give customers the choice. We want to give them a reason to come back, not rely on subscriptions. You know, our focus really is on great products at great value. You also got to remember that we deal in surplus, and it's very hard in the surplus world to do subscriptions because our product offering can change and does change.
Yeah.
So we're very much about value. I don't know what you think, Mike.
Yeah, I think. Look, subscriptions are quite a clunky tool to drive loyalty, and loyalty is incredibly important. But ultimately, we sell products, and if we do a good job, people will keep coming back. So loyalty is driven by you know, the choice you offer and the service you offer. Choice has definitely improved markedly over the last couple of months. Service not so, and we're really facing into that, and the move to 3PL will help. I think, can we do more to entice our already loyal customers to shop maybe weekly rather than monthly? Yes. Is that priority number one? No. I think, but you will see in 2026 as develop. I think what I'm grateful for are we've got a very, very good CRM system, and you know, experienced many. This is as good as it gets. Some of the data we've got in Shopify, we've got all the tools to be able to target each of our customers with, you know, different offers. That's where we've got to spend our time and effort. But there's no point doing that until you've got, you know, consistency of product choice. So it's all about the sequencing, and that will come in 2026.
Perfect, thank you. And the next question we've got here is, could you please state where the head office costs are set to remain fairly stable in H2 2025 and beyond?
Yeah, I'm happy to say that. I would say, yeah, relatively stable. I mean, we have made some additions and strengthened the exec team, as everyone will be aware. So I would expect a small increase, but broadly the same, I would say, in the second half.
Thank you. And the next few questions are on the THG partnership. You say the THG move will be completed by Black Friday, but can you please add more color as to how this process will flow, and can this date be beaten?
I think to say it can be beaten, I'm not going to create a hostage to fortune, because you've got to remember, as I said, we've got 40 articulated lorries to move, and anybody who's familiar with our current location knows that we're on the 3rd floor of an old mill. We have to move all of those items in a lift, and whilst we've got a couple of lifts, one of the lifts is a shared lift. So we have to do this at weekends and throughout the night. So it is a complicated piece. We're a long way down the track in terms of getting moved. I'm confident that we will do this as quickly as is humanly possible. We have people working sort of night and day on this, and we've got a really experienced team, as well as the sort of THG team who've done this many, many times before. But we've got to get it right. And not only have we got to get it right, in terms of moving the products, we need to make sure that there is no break in customer service, and we continue to supply people's orders throughout this whole process. So probably that's not the answer that anybody wanted, but it's the best one I can give with the information. But we're hell-bent to get this done.
Yeah, we are as quickly as possible, but what we cannot do is, is pick from 2 locations for the same customer. So, there's a lot of thinking and planning gone into this, and next 4 weeks is going to see us move. So it's we're building.
Thank you. Another one on THG. Are you beginning to see any traction on deals with THG's existing customers?
Yeah, I mean, we're starting to see some. I think that will improve tremendously once we're in there, because we've talked historically about the ability to deal with surplus product from some of their partners without it ever having to move location, therefore, reducing carbon footprint, making it easier for them to turn surplus into cash. So I think that position will 100% be improved once we're in that location. But so far we've done a number of deals, and we think that will just become bigger, faster as we move forward.
Yeah, especially for Boop. So in 2026, there'll be so much more opportunity to work with THG on all their great brands.
Fantastic. And the next question is, why is Q3 total revenue expected to be less than Q2?
I don't think we've given any forecast on revenue.
We did send a statement. We expected a 4.9. I think. I think this is a focus on I think the sort of more quality orders and basket margin, an emphasis on looking for basket margin. I think so. Yeah.
So I think it's important that we get operational profitability rather than unprofitable sales. So we've deliberately looked at the business and basically turned both Discount Dragon and Nutricircle into operational profitability in August and September at the expense of some sales. Some days we were selling very, very unprofitably before we took the formulaic approach and gave the balanced basket approach, which is what we've talked to. And so, this is what I talk about in terms of establishing a platform for growth. We've now got that platform. So I think in Q4, you will see that improving as we move through. But I think we continue to be focused on basket margin. Profit per order, or basket margin as we call it, is just so important. And we will now spend our time focusing for Discount Dragon on those returning customers. We were attracting a lot of customers for one-off buys and not making any money out of it. That business we've kind of walked away from, which I think's a really important stepping stone for not only the business but the team, because it is a different way of operating. And I think we've been guilty in the past of picking up deals and then maybe not having as strong a hit rate as we would have wanted to. I think now what you're seeing is consistency and a move to operational profitability. which I do believe is more important than just driving revenue that doesn't make money.
That's great, thank you. Perhaps one last question as we reach the 1 hour mark. Are you considering any additional business segments beyond the current 3 divisions?
No, I mean, there's nothing on the radar at all at the moment. And as Mike alluded to, our focus really is consistency and profitability. And that is the sort of the mantra as we move forward, the mantra in Q3 and the mantra in Q4. It is about getting the right customers. It is about getting those customers to come back. It's about building on Nutricircle, building on the growth and solid foundations we've made there, improving the product mix at Boop, and also getting transitions to THG for our fulfillment. So I think we've got plenty to do in Q4 as we strive.
Yeah, and there's a reference to admin costs earlier, but we do have a young and hungry team, but they are quite stretched too. And when I've looked at how we're set up, from a commercial marketing perspective, we're not blessed with big numbers, and I think it's important that whilst we don't increase our expenses going forward in administration until we drive growth, it's really important that those guys are focused on driving the consistency, and that's where we are.
That's great. Well, look, guys, you have covered a lot of ground there, so thank you very much indeed for addressing those questions for investors. And of course, the company can review your questions submitted today, and we'll polish those responses on the Investor Meet Company platform. But Martin, before I redirect investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Yeah, look, I think we've, thanks very much, first of all, for everybody attending. I know it's taken an hour out of your Monday morning, so we really do appreciate that. I think as the business stands today, we are probably more excited today than we've ever been on this journey. We've got a really strengthened sort of senior management team. The team below Mike and the team that work in each of the brands are amazing. They've done an incredible job. We've seen some massive leaps across the piece. We've seen massive leaps in Discount Dragon in terms of it moving to profitability and the consistency. We've seen massive leaps from James and his team at Nutricircle, who've really, rocketed that business, beyond our wildest expectations. Over 700% growth in orders is amazing. And I think we'd like to thank the Boop team and also the new additions to that team, who are really helping us strengthen our product proposition and will help us take that business to where it deserves to be. So overall, thanks very much for being shareholders. Those of you who are, those of you who are interested, please do come and join with us on the journey. And we've got a lot more to deliver. And I think, as we said right at the top of this thing, hopefully we're a force for good and a profitable force for good.
Fantastic. Martin, Michael, Dan, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Huddled Group PLC, we'd like to thank you for attending today's presentation, and good morning to you all.
Thank you, everyone.
Thank you.
Thanks.